Hey guys, and welcome. Today I wanted to talk about one of the hottest topics of conversation these days, which is the current state of the real estate market. So, as many of you know, I work in Ontario, I work in the GTA, Greater Toronto Area. It's really the kind of only metropolis here in Ontario. In Canada, our market is quite different than, say, the United States or the UK. But with everything happening in 2022 in the past 2 years of the pandemic, we've seen so many changes within the market itself. So I wanted to talk to you a little bit about what these changes are and what we're looking at right now from my own personal opinion. So first and foremost, of course, 2020, a pandemic hit, everything kind of dropped, right? Real estate market, everyone was scared, nothing was moving, and then all of a sudden stuff started to shoot up. And there were a few reasons for that. One of them being that people were able to actually move further out, right? So when you're stuck at home, you've got to work at a home office. It becomes a little less ideal working out of your bedroom, especially if you're living with other people, you're living with your parents. So a lot of people actually went to move out into areas further away from where they were actually working because of the work from home policies that were implemented. The other piece is that the government dropped interest rates to really fuel the economy. So with these low interest rates, eligibility for larger mortgages was there, which was a big shift. So people could afford homes that maybe they couldn't have before and within different price ranges, et cetera, et cetera. And so things started to move really quick. There wasn't a ton of inventory, but there were a lot of people that were looking to move, right? So it may have been people moving out of parents' houses, cohabitations, whatever that looked like. People were not selling, but were looking to buy. So there was a lot of demand going on. And that was one of the biggest pieces that kind of came out of the pandemic. There was a lot of movement, a lot of demand, and prices skyrocketed. And people were able to afford these prices because at certain points, I have a couple friends that were able to lock in or attain mortgages, variable rates at 0.8%. It's almost like free money. Like you're almost getting paid to buy the house, right? From what we've known. And so that was one of the key factors there. Things went up in January, February, March of 2022 was absolutely insane. Things skyrocketed even more. We were at a point where I didn't even think things could go further up, and they absolutely did by quite a bit. And so prices were at their all-time high. We've seen now in recent months with the Bank of Canada raising interest rates and doing quite a few point hikes, very, very quickly to kind of ease inflation. Inflation is the highest, I think it's almost 6.9%, which is absolutely crazy. The rate hikes have really started to slow things down. Even with that being said, because there was such a peak in January, February, March, even this slowdown has not brought us back to December 2021 in terms of pricing. We're still high. I want to talk a little bit about different factors that are actually kind of affecting this and what we're looking for in the future and all those different points, just so that you know and you have an idea of, okay, what does this landscape really look like? So moving forward, people are saying, oh, okay, there could be a crash, could be a recession, all these different points. Absolutely possible. Nobody has a crystal ball, and the way that things are kind of moving and have been moving, it is pretty volatile. However, there are a few kind of pieces here that I want to talk about that contribute to that and support that, and then others that don't, and why this would be kind of different. And so the first one, of course, is there is a massive demand, right? So although people are saying, okay, this could crash, there is a huge demand for housing. If you look up Canada's immigration numbers, when we look at kind of even from 2000 to even last year, we're really sitting in and around 250,000 new immigrants into Canada year after year. Okay, that's really where we sat. There was a spike in 2016 where we hit over 300, but more or less in and around the 250,000 range. During the pandemic, these numbers dropped as well. So they were even the low 200s last year. But The amazing thing is, although we are facing kind of this housing crisis, the government has slotted out or planned for, uh, they're looking for 430,000 new immigrants in 2022. 2023, um, as per the Government of Canada's website, we're looking at 447,000. 2024, 450,000 new immigrants. These are massive numbers. The demand for housing is going to continue, and those who are here looking for housing are going to be in competition. If you're a first-time home buyer trying to get out, you're going to be competing with these 40,000 some odd immigrants coming in looking for housing as well. And so that's one of the key pieces, because when we really look at, again, where are they buying, what are they buying, there is a massive amount of demand and not enough supply. There are a few things that go into this, but really we in Canada, we have the lowest number of housing units per 1,000 residents in the G7. So we have our numbers, it's 424 homes per 1,000 Canadians. When we look at kind of the average across the G7, it looks at around 470 homes per 1,000 residents, right? And so we would need at least an additional 100,000 homes to keep kind of the ratio to housing units stable or really attainable. And we don't have that. There are kind of initiatives from the government to build new homes. The problem is these initiatives are, when we really look at them, a little bit kind of fabricated, in the sense of we've got some serious labor shortage issues here and in the US as well. But many people, we call it the Great Resignation, if you've heard of that. Many people have moved out from their traditional jobs, and because maybe they've moved further out, they're working remote jobs. There are many employers who are hiring remote. It's the construction industry itself, it's really hard to find skilled laborers as it is. And so with everything that was going on, even with government supplements in terms of financial aid, many people moved out of that area, and they were either collecting government aid for a long time and haven't been working for, the majority of the pandemic, or it's really hard to find those skilled laborers because, the demand for renovations and all these pieces is very high. And so they're doing it on their own. There are quite a few factors into this. On top of that, one of them being supply. So supply chain is absolutely disastrous. We run our own general contracting company, and procuring materials is, at this point kind of a nightmare, right? As well as the elevated cost of living, right? Elevated cost of working. Gas prices we're over $2 at this point. It's a lot. So when you look at what things cost and all these different pieces put in together, it's much more expensive. So it's expensive to build these homes. There's not enough laborers to actually do it. And the last piece that is really, really daunting and actually quite a large issue all around is that when we look at the municipalities and the hold that they've got when it comes down to permits and all these different pieces, there is so much red tape. There is a huge amount of red tape. And that causes a huge issue and a huge delay when it comes down to building these new homes. All of this stuff needs to be approved. It needs to go into planning, tons of red tape. And I'll give you an example. We were working with the city of Hamilton, and they are so short-staffed and so overwhelmed with the amount of applications and things coming in that we had a permit sitting there, an application sitting for almost 6 months before it was even looked at. And we were calling every day. Had to be escalated to the manager. That manager left, was put on, I think it was about 6 different people that actually saw our application and had to go through and review it. And they would say every time, I don't have the time. I will get to it. I just don't have it now. And it has to go through all of these different processes, and they're really dated, right? They're quite dated, and they're really stringent to a point that they actually don't need to be. Because at the end of the day, when you come in, and you're doing these permits and these applications, somebody has to come in and check out the work, right, and actually sign it off. So it's not as if that wouldn't be happening or that's a step that's skipped. It really is the back office. Those inspectors and the guys that come out are there and they're available. It more so is really that back office and that process that is a massive slowdown. Just, again, tons of red tape. So there are huge kind of barriers to actually gaining these 100,000 plus homes that we actually require to keep this in balance. Now, the next piece, that I want to kind of speak to when it comes down to almost looking at, okay, will there be a crash? If not, what would that look like? Personally, I truly do believe there is going to be a decline in housing prices because first and foremost, affordability is going down. Or eligibility, I'll say, is going down. So when we look at the Bank of Canada and the interest rates, how they're going up, they have another one set for, so we're May 31st, they have another one set for tomorrow, another hike. They're going to hike it another 50 points, so they say. There are a few more set out until the end of this year. When that happens, it doesn't matter, the amount that you're able to afford with the higher interest rate is going to decrease. If you've got a 1% interest rate versus a 3% interest rate, obviously that's going to be different, right? Because the interest is going to factor into, of course, the amount that you're actually you're purchasing, right? So no matter what, prices will come down in that sense. Will affordability come down? I don't think so, right? I do think that we're going to see a bit of that decline. The other issue that I see is that many people purchased homes with very low interest rates and they were variable. So maybe it's a $900,000 home, condo townhome if you're in Mississauga or Brampton, right? Which really has been a thing. And then you've got your interest rates rising. So I'll tell you, I have a variable rate on a home with a $470,000 mortgage, and that has gone up $200 in since the beginning of the year because it's variable, right? Imagine inflating that to a $900,000 home. It's a lot of interest, right? You're looking at $500 extra a month, and that's just going to continue to increase until the end of the year. When you're already stretched, when you're scraping by, because that is quite a bit of money, those mortgages are huge, it can be really tough. And so I do think that there will be some people who just cannot afford their homes. And I totally understand, or I see how that can really be a thing. So I do think that that's going to be a piece. The other thing is that when it comes down to investments and investors, it's a really volatile market. They were taking up 25% of the market during the pandemic. There were a lot of investors flipping homes or purchasing these properties because the returns were there, right? They are, I think, going to be squeezed out not only by interest rates, but also because of volatility, right? If you're looking at purchasing a single family home for over $1 million and trying to duplex it, even if you do so, your rents will not pay your mortgage, right? Unless you have a massive down payment, you have a massive amount of cash, which is, fantastic. But for the ordinary investor, usually they're working on borrowed funds or JV or whatever that may be, private funds. So they've got to pay that back. And it really doesn't make sense. The numbers don't necessarily run in all places. In some areas they do, but there's going to be a large amount that do not. So that's one piece there as well. The last thing that I want to talk about is the housing prices versus income. So how that's been trending over the past few years. So really, if we actually look at this, and I'll link this article in because I think it's really important that we take a look at it and that we are aware of what's going on. When we look at the G7 house price to income ratio, Canada is literally the absolute worst. So housing prices have risen over 64% faster than incomes since 2005. That's huge, 64%. There is no other country that even comes close to us in the G7. And so again, it's like, how are you supposed to afford this home when you're working on a $50,000, $60,000 salary? These $1 million homes, and again, these $1 million homes are not, anything crazy. We can be looking at a semi-detached in Smithville, which is in the middle of nowhere. And these homes are over $1 million, right? How are you supposed to really be able to supplement or afford that with an income that does not even come close to, what these pricing houses are and how fast they've risen. So to kind of wrap this all up, for myself, again, personal opinion, I do think that we're going to see quite a decrease here in the Canadian market. And if they continue with these interest rates, they've been asked to stop, to stop. Some people are begging them to stop because of the fact inflation is so high and people actually can't afford these mortgages once we look at if they're variable rate. People refinanced, a lot of people refinanced during the pandemic for lower rates, but these variable rates are now moving with the base rate, right? And so this added on top of inflation, added on top of all these gas prices, people having to go back into the office, this is huge. So I do think that we're going to see a decrease. However, I do think as well, with the government advocating for around 430,000 new immigrants this year, that's their target. I do think we're in a lot of trouble in the sense of there's still a high demand, right? And the demand is not, it's not that it's still high, it's that it's continuing to build. People are still going to be purchasing up these houses and they need a place to live, right? These are going to come off market. People need a place to live. They're going to have to buy something, and they normally do come with money, right? And so I really do think that although we'll see a drop and we'll see a dip, I don't think anything's going to crash. I do think there are way too many factors that are working against anybody trying to buy a home as a first-time home buyer, or who is in a place where, they're trying to move into the city or into a more populated or dense or more expensive area. I mean, way too many factors working against you if you go the common route, right? If you go the common route of just selling your place and buying a new one, or trying to save up a down payment for your next home. It can be really, really, really tough. And so, of course, there are other ways around that. We'll talk about that another day, but that really is where my stance sits. So would love to hear, your comments, would love to hear your feedback. You can pop that into the comments below, or, check me out on Instagram, on Facebook. I always love to connect. I love to hear different opinions, so would love to hear from you. Thanks, guys, and we'll talk to you soon.